Hi everyone! In the past lesson, we already know the following terms: accounting, nature of accounting, functions of accounting, and history of accounting.
Accounting is a system that identifies, records, and communicates relevant economic events to interested users.
Nature of accounting. Accounting is a process, an art, deals with the financial information and transaction, a means not an end, and an information system.
Functions of accounting: keeping systematic record of a business transaction, protecting properties of the business, communicating the result in various parties interested in or connected in the business, and meeting legal requirements.
History of accounting. From its early development in Mesopotamia to the modern accounting system used in the present day.
We will also recall the accounting cycle. Accounting cycle. It is the process by which the accountants prepare financial statements for an entity for a specific period of time. For a new business, it begins by setting up ledger accounts, and for unestablished businesses, begin with account balances carried over from the previous period. The steps in the accounting cycle. Number 1. Analyze source documents and record business transactions in a journal. Number 2. Post journal entries to the ledger accounts. Number 3. Prepare an adjusted trial balance or TB. Number 4. Journalize and post end of period adjustments or EOPA. Number 5. Prepare adjusted trial balance or TB. Number 6. Prepare or create financial statements and reports from data in adjusted TB. Number 7. Journalize and post the closing entries. Number 8. Prepare the post-closing trial balance. Number 9. Prepare and post reversing entries. So now, we will be tackling all about ledger.
Have you noticed something earlier? Well, if you do so, all of that was just a part of our topic to be discussed. All the phrases highlighted and was emphasized earlier is related to what you call ledger. Definition of ledger account. Complete listing of business transaction for an individual account, where you look if you want to find the balance of any given account. A ledger account is a tool used for classifying, summarizing information about increases, decreases, and balances of financial statement items. More information about ledger account. An account, specifically ledger account, is an accounting device used to record changes in a specific asset, liability, or owner equity items. It has 3 elements: title, debit side, and credit side, also called as the account. Changes in the accounts are entered manually into a book called ledger or computerized ledger. Basic forms of book ledgers are the 2-column account format and the running format account.
There are 2 general ledger account formats: the 3-amount column format and the T-account format. The 3-amount column format, debit, credit, balance, used in general ledgers in the business world. The T-account format, used primarily for teaching and analysis of complex transactions. This is the example of the 3-amount column format. This is the example of T account format. For the sake of simplicity, we often use this format in teaching accounting. What are debit and credits? Debit refers to the left and credit refers to the right side of the T account. Tool used for recording transactions, debit or DR, credit or CR. Let's see how debits and credits affect the different types of accounts. And it is used in the following types of ledger account. Type of ledger account. First, assets. Second, liabilities. Third, stockholders' equity. Fourth, revenues. And fifth, expenses.
Using debit and credits. Again, debit and credits are used to increase or decrease account balance. Determining whether to use a debit or credit to record an increase or decrease depends on the type of account in question. The balance sheet equation is the basis for the determination. Posting is the process of transferring figures from the journal to the ledger account. It's involving copying information from the journal to the ledger account. It is simply involved from transferring data from accounting entry into another. Its purpose is to classify and summarize transactions and events affecting specific elements of financial statement. First step of posting process. Number 1. Transfer transaction data to the account date column. Number 2. Transfer the debit and credit amount and calculate the new balance. Number 3. Write a journal page and posting reference column or ledger as a cross-reference. Number 4. Go back to the journal and write account number in posting reference column or journal as a cross-reference. Cross-reference. The ledger account number in the post-reference column of the ledger account. This is an example of posting.
Important things in posting a ledger. The year, month, and day are entered in the date column. The description column is for special notations you may want to enter. The posting reference column is used to refer back to the original entry. For example, a G3 entry would indicate that the information came from the journal on page 3. If a debit appears in the journal, it will appear a debit in the ledger. If a credit appears in the journal, it will appear as a credit in the ledger. A running balance appears in the ledger. The number of the ledger account will appear in the post-reference column in the journal. Tips in setting up and using accounts in the general ledger. To make posting as simple as possible, a separate ledger sheet is used for each account. All the accounts together make up the general ledger. Completing the balance columns of the T accounts. As each entry is posted from the journal, the ledger account's balance is computed or recorded in either the debit balance or the credit balance column. Correcting errors in the ledger. If an amount is incorrectly posted or posted to the wrong account, the error is corrected by drawing a single line through the incorrect data and writing the correct information above it. If the error involves a journal entry that was incorrectly recorded and posted to the wrong account, then another entry is required to correct the error.
In proving the ledger, the trial balance tests the accuracy of the entries in the ledger. Account numbers are recorded in the first column of the trial balance for identification and reference purposes. In this video, you have learned the following accounting terminology. First, balance ledger form. The second, general ledger. The third, ledger. Fourth, posting. And the last one is posting preferences. And now, we will do the recap. The facts about a business transactions are sorted and grouped by transferring the information in the journal to the ledger. This is called posting. An account must be provided in the ledger for each financial item in the business.
In the posting process, posting references are recorded to permit easy tracing of an entry from the journal to the ledger or from the ledger to the journal.
Ledger accounts are arranged in an easy-to-follow order for preparing financial statements.
Are first, an income statement account follows.
After all postings for a month have been completed, a trial balance is taken to prove the accuracy of the ledger.